I'm trading a Robinhood account from $3,000 all the way to $1 million, and I'm showing you every step of the way how I get there. Today in the account, Monday, August 25th, we closed at $23,087.89. We're up 5.6K on the month, 2K on the week, and we're down $408 on today's weakness. If you've been following along on Friday, the market did have a really strong rally after Jackson Hole. Jerome Powell did signal to markets that he is thinking about doing a potential rate cut relatively soon as the job market continues to deteriorate. And the market took that as bullish, and we had a really strong rally. We hit resistance and all-time highs on the S&P 500 and had a bit of a pullback. But I do think we are going to continue higher. We just really got to see what happens with NVDA earnings on Wednesday. Now, unlike most videos, I'm still going to go into the positions in the account, some trade setups. We're still going to cover Unity software, which I still think is the best risk to return position right now in the market. And then we saw a lot of unusual activity flow today. So I still think it's very early stages. We could see a really strong meme gamma type squeeze like we did last year with GameStop, but this time on Unity. But I am seeing a lot of questions. I'm also seeing a lot of errors and mistakes that people are making in the Discord community. Mel, you know who you are. But if you aren't already, you guys can join here. We got a lot of really good discussion. People are also making a lot of money in here. It's not just, you don't have to follow everything that I'm doing. I'm really just someone here that's making suggestions, and I'm posting all of my plays as well for free. So make sure you guys join that. A lot to learn. But today, really the account, we had some weakness. Grab and Neo are two of our biggest share positions, as well as option positions, and those both had a pullback today. So that was negative on the account, but we had it partially offset by Zeta, Tesla, and Unity rallying. Now, Tesla is in a breakout right now. I do think we are going to continue to push. TSLL, which is a leveraged ETF, we're up 165% on that position. And then we do have these Tesla October 360 to 365 call spreads. Unity, we did buy a bit more in today. Neo, last week, we actually sold covered calls on this position. So we sold 17 covered calls. We used 400 shares of collateral. So we have 445 shares. We can sell 4 covered calls. But the reason we were able to sell 13 more was against all of these in the money leaps. So you're able to do a poor man's covered call by using leaps as collateral and then selling shorter out the money calls with a shorter expiration date. So we sold these 17 Neo. I wish I would have waited till this Monday morning because it actually was green at open. They were trading for 24 cents, but of course it died. Neo's been on a crazy run, so that's why I sold these covered calls. It's really unlikely that it's going to be trading over $7 by the end of this week because earnings are on September 2nd, and it's already been up like 40% since last week, and I think over close to 100% on like the last 2 months. So it's really hot. It needs to pull back. It needs to consolidate, and that's why I've been selling covered calls in this portfolio as well as my main portfolio. And really, if you think about it, this position, I'm going to collect most likely $170, and my position is 2,700 plus roughly 2K. And if you do the math on that, 170 divided by, we'll say 47 or 4,800, that's 3.5% in 7 days of time. If you divide that and then multiply it by 365, that's 185% annualized return. So as this portfolio grows and we start selling options more, you can see how this can quickly compound into pretty massive dollar gains. They don't have to be that big percentages, but if you are constantly stacking wins in account, then it starts to compound and grow. And then Grab, we're still really bullish there. We're just waiting. It just keeps hovering at this $5 level, but it's going to go. Upwork and Zeta still bullish there. I think Upwork will trade towards $17 to $18 by the end of this year pretty easily, maybe sooner than that. DeVito, we're still long there, even though it had a pullback. And then Zeta actually has a lot of institutional ownership, I just realized today. So this one's an even better position to continue higher. And then we do have 6 call contracts for 20 and 22.5 strikes for December. So still really bullish on Zeta. It didn't go up that much today, but you can see here on the week, last week, it did have like a pretty strong rally on Friday. It was up over 7%. And on the month, it's still up 22%. So we got really good entry on these. We're up 65% and already took out a lot of profit here as well. But let's just hop right into the charts. And of course, I'm going to start with the overall market. Then we're going to get into Unity. And then I'm going to give you some tips and tricks on actually how to pick the right call contracts, Milk. So looking at SPY, we did bounce off of this uptrend, right? So you had this uptrend coming through here, and we did bounce on that trend line. I don't know if we actually quite tapped it. So let's take off extended trading hours. We didn't quite get down there. We got into this previous gap that was here. We filled some of it down to 633, but then we bounced out of there and we hit back near all-time high. So this really strong move on Friday, and then we kind of gapped down, we filled it, rejected, and now we're falling back down to this 643 level. Maybe we'll come back down into this range and fill a bit more in this low volume area. That would be constructive, and then maybe we'll bounce and continue higher. It really just depends on what NVIDIA does this week, as well as we do have GDP growth rate on Thursday. Tuesday, we do have durable goods. This shouldn't be too much of a big deal. That is coming out tomorrow. And then Friday, we do have core PCE. So on Friday, there could be a bigger move depending on what this data looks like. But really, we're going to be looking towards next week with non-farm payrolls and employment rate. That's going to be a really big signal. Same thing with like JOLT and PMI as well. So these are like inflation and jobs. Obviously, that's the dual mandate of the Fed. They're starting to focus a bit more on jobs because ultimately, if the job market is getting worse, they are going to be forced to cut rates regardless of inflation numbers. Because at the end of the day, if people are unemployed, that's extremely deflationary. And inflation will solve itself. If the job market goes to shit, excuse my French, but if it does, then inflation is also going to go to the woodshed with it. And so the Fed knows that at the end of the day, they have to focus a bit more on jobs. And that's what they were talking about on Friday. So SPY's kind of hitting all-time highs. Qs actually came back up to this downtrend. It couldn't quite get the breakout today. It did sneak a little bit over it, but it wasn't able to close above, and we rejected. And you can see the same thing that's happening here on the S&P 500 hitting all-time highs and rejecting. And then, this is like the same relative line on tech. So QQQ and the NASDAQ 100 spot index, you can see that it didn't quite get above that. And we had a little bit of a sell here as well, where this previous trend was. So right now we're in a kind of an interesting setup. We weren't able to try to break through this. We did reclaim the trend. Now we're breaking back down after Trump is talking a bit more about digital tariffs, as well as he fired Lisa Cook, which is one of the Fed members, which is ultimately going to be bullish because he's trying to take more majority by appointing people of his own in the Fed, and then he can increase the likelihood of rate cuts. And so that's all bullish overall. But nonetheless, more tariff news, like we did break back down here. So we'll see if we can reclaim this again, but it's been invalidated already. So this trend line is not as important. What I'm really looking for is a break of this upper trend, right? This downtrend that's happening here. At some point, we'll probably break that to the upside, and then we'll have a bit of a rally. Hopefully it's on NVIDIA earnings. We will see. And then Ethereum, I am long SharpLink Gaming, which is an Ethereum ETF. But I do think Ethereum is going to break higher. Obviously, we had this bull flag broke out, retest, and then that really strong launch to all-time highs. We actually broke above for a period of time. And then there was a really big liquidity wall here, and there's just too many sellers. It rejected. A bunch of people got liquidated. But we're coming back down. We're retracing this whole breakout move. We might find support here and continue higher. I still think Ethereum's going to rally into the end of the year. It's extremely unlikely that we're going to see like a really strong capitulation in crypto just because of rate cuts are going to be ahead. There's going to be a whole narrative of a soft landing. I think you're going to see a lot of risk on. Bitcoin actually did come back down to this 109.3K level, 109,000. So it fully retraced this breakout of this previous pattern. So we're more than likely to find some support here. We did have a breakout, hit all-time highs, and then we kind of fell and validated this line a bunch. So that's really not all that important anymore. Now we're looking at this more recent trend line, right? See if we can break above that and maybe start forming a move higher. Obviously, this is a low volume area, so we could spend our time chopping here. But like I said, I still think overall we're going to see a really strong rally in risk assets, crypto, gold, just the overall market. I think because everything is easing, the government spending more money, potential rate cuts are on the table. There's no reason really for the market to sell off unless there's like some sort of crazy black swan that happens. And of course, I'll continue to monitor all the news that's happening over the next couple of months. But right now, I am extremely bullish because I think that the market is kind of doing what it did in '08, as well as the dot-com bubble. When they start cutting rates, the market rallies, and then the job market is going to deteriorate faster than the benefit of these little 25 basis point cuts. The market will continue to rally on this, thinking that the coast is clear, and then the job market is going to go to the woodshed. And when that happens, then this rally that's playing out, people are going to be buying and FOMOing in here, thinking that rate cuts are always bullish, and then we're going to have a really strong capitulation. And that probably won't happen until maybe super late this year, but most likely next year, right? So it seems like every year now we're having these like really strong pullbacks in the market that you're seeing. Obviously, we had like the move to 610, 613, the big sell. Now we're just like pushing higher and higher. We could have like a bit of some volatility here, but ultimately I think we're going to continue higher, like 660, 670, 680. Maybe we even get to 700, which is only like an 8 or 9% move from the current price. That is possible by the end of the year, even though it sounds crazy. You got Apple, which isn't near all-time highs. The Mag 7 has kind of rotated through, hitting like on all of these, right? So like Amazon is getting close. It had the gap down. It filled the full gap, rejected. Now it's starting to bounce again. This will most likely push towards 242 and probably break through. Google, same thing. Just recently broke all-time highs. You already know that Microsoft had the crazy rally, broke through. Same thing with Meta. Meta broke through all-time highs. So really what we're waiting for now, obviously like NVDA and Netflix are trading at all-time highs above the February highs, right? So the market had the big sell-off with trade. Now we're trying to get through on Apple as well as Tesla. Tesla is still far behind. I'm super bullish here because you have a break of that long-term trend, right? So if you draw a trend line from the highs through the more recent lines here, you can see there's a lot of reactions here, and then we broke through on higher volume, which is confirmation of this breakout. We came back down and retested that level, and then we've had 2 strong volume days. Now you can see here there's like a more recent trend, right, through that line, and we didn't quite get through. So we rejected around there today. Like if you were playing weeklies, you could have sold right around here. But I still think we are going to push through there because the more important level is around 359 to 367, which is where like this previous breakout was, right? So really that's what I'm looking for on Tesla. And really, so like the reason why I think that people choose the wrong contracts, so like a good one is someone was talking about buying a 270 call option on Apple for January. So that is pretty far out in time. You can see here, like, they would have to get to this price range by the 16th of January. So you can see that's the line there. So you do have a lot of time for price to develop, but that is assuming a 19% move to 270, but your break even's probably a little bit higher. So you need at least like a 20% move on a stock. And it might actually get there by that time because Apple is in a breakout, right? You see it came through that orange line, through these two highs, this downtrend. It broke out on a lot of volume. They do have their Apple Day coming up on September 9th. So I am still really bullish on Apple. It came back down and retested that previous gap. It's starting to bounce. It could certainly try to fall a bit more and kind of retest into this area. But nonetheless, still really bullish on Apple. But for me to make the best possible risk to return ratio on a contract, you don't want to buy something that is that far out the money, right? Because maybe it gets to 270 on your expiration date, but it expires at, say it's like it lands at 270. Well, then you're gonna lose all your money because the price has to be above your break even, but you'll lose 100% of your contract. But if you bought like 250s, you're gonna have a lot more optionality in your contract, okay? Because say you have the 250s for even December or January, you're going to gain a bit more on your contract. And through some noise, when you're really far out the money, like this pullback that happened here, like say you bought those 270s down here, price runs up, you'd actually be up quite a bit on your contract, but you're like, oh, I'm just going to hold because I'm still 20% out the money. But when this little drawdown happens, that kills your contract because you're so far out the money. If you're at 250 and you bought it back down here when it was 215, this 250 is probably still going to be up like 75% even after this pullback that you see here. Whereas the 270 call is probably going to be back to zero because you're so far out the money, and time is, and the IV that pumped here on that contract just completely drops the price after that move. So it's really in your best interest to buy something that's a bit closer in the money with a better risk to return profile that gives you a lot of optionality. Because say the price got up here, you're up like 125% when price moved up here. Well, now you can sell, you can either take profit and trim, you could sell the whole position and then wait for a pullback and re-enter, or you can spread out of your position with like 255 calls, right? So now you have a spread 250 to 255. So you're actually taking some credit out of your position by selling the 255s. So say you bought in at like $2 down here, the position runs up to like 450, but then you can sell the 255s for like $2 or something like that, right? So you sell that for $2, you take out your original hold. Now you have a spread from 250 to 255. If price continues higher and actually expires within that range, then you'll be profitable. You'll go through your break even and you'll make money on that position. And then once this pullback happens, maybe now you buy like the 255 calls back, or you buy more 250s or maybe even 244s. Like you can change your expiration, but you don't want to be too far out the money on a position, especially like on Apple, where it's not going to just like have this crazy run. It's very unlikely. This is a more mature company. Obviously, there can be like these really strong bursts that happen on price that you see historically, but it's not always the case. We just had a really strong burst to the upside. You should be taking profit and then just like waiting or spreading your position and then buying back more with your profits and just stack and rolling and managing your position. If you're this far out the money, I guess the rule of thumb is you always want a chance to be in the money by expiration. And you have to understand like how much the actual price of the underlying moves and what does that mean for your contract. The contract might move a lot when this happens, like say it was selling a lot here and you bought the 270s down here, you would actually make a lot more on the 270s than the 250s if you were able to time this move properly. But once this little pullback happens, this 270 position is going to just get destroyed when that happens. The 250 is going to hold a lot more value and just give you a lot more optionality. And at the end of the day, your odds of success, your probability of going in the money is infinitely greater at 250 than 270 because you have to get through all this resistance, a bunch of different resistance levels, which at the 250 is going to give you better risk to return to take profit at all of these levels. So I can't really stress that enough, is like pick a date, not just a strike, but a date where you think it's possible for the stock to actually get in the money. And then on the chart, you want to buy something where your break even is kind of like at a resistance level, right? So you're like fully in the money either on your strike or your break even, which is just the strike plus the price that you pay for the contract. So if you buy the 250 and it costs 200, then you're or $2 per contract times 100, right? Because it's 100 shares. Then your break even is 252, right? You just add the $2 to the 250. But, you know, seeing on this chart, like 237 and 247 are the levels that I have. So maybe I should buy like the 247.50s instead of the 250s, because that way, like, it's going to get right to my in the money and the call is going to flip in the money, and that's very bullish and positive for the actual contract value. And then I'm just going to, you know, take profit from there. So like have a target in mind and buy the right contract, looking at different resistance levels that you have on the chart. It's very important. I know that's a lot, but let's just like hop right into Unity, because obviously this is what everyone's really coming here for, is Unity software. Obviously we've been in like a pretty strong little breakout move here. Even on the weekly chart, this is just starting to look very, very bullish. You can see it's coming out of this bottoming pattern and starting to curl to the upside, and it's trying to consolidate here and break. I do think that it is going to break. There's just way too much options gamma. There's just too much call flow on the options chain for really all expirations now. And it's not like it's just not growing. They're continuously buying more and more, and they're even squeezing it on shorter dates. So right now we did hold above 38.92. We closed there above on Friday, and we'd also had a little bit of a retest, kind of gap down in the morning, but then we pushed and actually closed above at least the intraday pattern. There was a bunch of 43 October calls that were purchased. They did purchase more. There was also $50 calls being purchased for September 5th, over 100K in a 5,000 contract block. So I can show you that here. This is also really useful on TradingView. If you click this options button, search the underlying ticker, click on Unity software, and it'll bring up the options chain. You can click on the date and then pick either the call or the put that you're looking for, and you can actually see the volume throughout the day. And so you can see here on the 1 minute chart, there was a 5K block that was traded. These were bought to open. And I can see that on unusual whales. So I can actually see that this was at the ask. So there was about $100,000 in premium that was purchased here. And then throughout the rest of the day, there was a lot more that was purchased. Not sure what the total volume was. I think it was like a little over 12,000. So quite a lot of premium traded today just on the 50 calls. So those are really far out the money, and only 2 weeks of time for that to go in the money. And then we also had a lot of rolling that happened on bullish risk reversals that I talked about in the past. So you can see this 10K volume spike that happened on the 41.5 call contracts for August 29th, which is this Friday. So right now what I'm thinking is, I think Unity is going to try to push towards 43 by the end of the week. Maybe it will squeeze even more. Just to give you a rundown of all the flow that's sitting on this stock right now. So last week there was like 27,000, I can't write, hold up, 27,500 call contracts on the 37.5 calls for August 29th, which is this Friday. They also sold 32.5 puts, right? So these are sold to open. So they're collecting a credit by selling these 32.5 puts. And then with the credit, they were buying these 37.5 calls. Now today, they actually rolled this position for the same expiration. So still August 29th, they rolled 10,000 contracts of the 27.5 calls from 37.5 to 41.5. So that's even more bullish, right? On the same expiration, they're already in the money on 37.5s. They're being even more aggressive by rolling to a higher strike that is out the money. We're at 39.82 right now is what we closed at. So they're expecting a move over 41.50 with 10,000 of the 27,500. Now, this is $5 million that remain on the 37.5 calls weeklies. So that's still a ton of premium that's sitting on this 37.5 at a roughly 0.75 delta. So there's still some delta there for, by the end of the week, there's going to be more call buying that happens as time goes by on these contracts. Since they're in the money, this will trend towards 1, and that will force option dealers to buy additional shares of the underlying. And then on this 10,000, that was about 600K that was purchased on the 41.5 calls. They actually made money on this trade. I think about 1.2 million on the roll of those 10,000 contracts. And then they made like 190K or so on the rolling of the 32.5s. So that these 10,000 were rolled to 36.5 puts for the same expiration. So they think Unity is going to be trading over 36.5 and hopefully over 41.5, which is their new strike. So Unity is in a really solid position to continue higher. I think that, at a 15, or now it's at 16.83 billion market cap, this can certainly push towards $30 billion in market cap. So, GameStop last year before the dilution, it went from like $10 to $65. And at $65, that was around 30 billion market cap, which like GME now is at like $20 and it's a 10 billion market cap with like a 9 billion cash position. So, Unity is actually a real business. Their vector platform could have some actual real results, whereas GameStop, they don't really have a business model at all. They're just trying to buy crypto and do collecting cards, whatever. It's not really like a legitimate business model, whereas Unity is a real company with potential real operations that can benefit the stock. Now, this is the roll that I was talking about. So you see all the 32 to 36.5, the 37.5 to the 41.5, and then the 50 calls that came in. That was 12,317 volume that was purchased for September 5th. So 2 weeks, they're thinking that Unity is going to push over 50, or at least the whale thinks so, and usually that's a pretty good sign. And then something that's really interesting on Unity is, so like we can see all the results here. This is a really interesting tool. I highly recommend using visual stocks, visual with a Z. And it has all these data visualization. You can see like the cash flow, customers, net income, just like financial metrics and customer data, which is really cool. But it also shows here like their ownership breakdown. So right now, institutions, at least according to visual stocks, own 87.5% of the float of the total shares outstanding, and of which 4.74% are owned by insiders. I can't really zoom in here, sorry, but that would mean that only almost 8% are owned by retail. 8% of all shares outstanding are owned by retail. Now, I don't think that this chart is actually accurate. It's probably closer to around 20% from other data feeds that I can see. But nonetheless, that means that, 20% of the 420 million shares that are outstanding are, so that's 84 million shares that are publicly available. And it's just really the law of supply and demand. So what that means is that Unity trades about 15.5 million daily volume. So 15.5 million shares are traded per day on Unity, of which only 84 million are actually available to trade. So what's really interesting about this, and which to give you maybe this will make a bit more sense, is if we look at GameStop. So GameStop had that really crazy squeeze last year, right? Well, GameStop is actually owned by like 51% of the float is by retail. This big blue pie chart here, this section is owned by retail. So retail is kind of like the active traders in a sense, right? Institutions are usually buying and holding for a longer period of time. Insiders might not actually be able to sell. And so this side of the pie chart is kind of locked up. Whereas this is the shares that are being traded in and out per day on average, you could assume. So what that means is that Unity actually has a higher squeeze score than GameStop last year. GameStop squeezed from $10 to $65. When Roaring Kitty tweeted that he was in GameStop, it squeezed like over 200, 300%. And so even without Roaring Kitty tweeting or not being in the stock, which I'm almost 100% convinced that he is, even without any of that going on, there's only 84 million shares available to trade, and everything else you could just assume is locked up by insiders or institutions who are passive traders who are not trading in and out of the stock. They're just buying and holding for the long term. And so only 84 million is available. And that means that if people are buying and holding, there's less shares available. And as price continues to squeeze higher, options dealers who, because the options chain is so loaded, which I can show you here. If you go to open interest on optionscharts.io, you can see all the calls and puts across all expirations. And you can see the total options chain here. There's over 80,000 here on the 30 calls for January, which I believe to be Roaring Kitty. There's 43 calls. We're starting to see a lot of volume here on October 17th. There's even $65 call strikes, 37,000. But overall, there's 650,000 call options that are open currently. Now, you don't know completely if those are all buy to open or sell to open, but nonetheless, you could assume that a lot of these positions are buy to open, and that means that option dealers are going to be forced to hedge as price continues to move higher. They hedge their positions because they are delta neutral. Really what this is the options dealer sells me the call that I buy, and they don't want to lose money. And so as the price goes higher, they are forced to buy shares of the underlying stock. And as the stock continues higher, more and more they purchase more and more. If I'm in the money by expiration, then they would essentially own 100 shares per call contract. And so as Unity continues to squeeze a bit higher, because you have all of this options chain just like through all the strikes on all these expirations, and there's so much of them, option dealers are going to continue to buy up more and more of the 84 million shares that are available, and they're price agnostic. They don't care what the price is. They are hedging the position. So as price goes higher and there's less and less shares available to be bought because retail is buying and holding and buying even more call contracts that are creating even more leverage, all that leverage is going to just force the stock, squeeze it higher. And then if Roaring Kitty tweets, you're going to see like a 2, 3, 4x move on the stock. Like obviously I'm still being smart and taking profit at a bunch of these different levels that I'm looking at, like 43, 47 to 50 is like a supply zone, just because like of the previous highs that we had here. There's not a lot of volume between that and all the way up to around $69, $70. So like you could get this really strong move because all the volume is down here. There's not a lot of volume up here, and price can slide very quickly through that low volume shelf because price is trying to discover what it's worth. And there's not a lot of price discovery at those levels, right? Like if you were just thinking about the price of something in an auction, like you look at like past history, what it's traded for, and because it hasn't really traded in that range all that much, like people are not going to know what it's worth, right? Like if I know that it's traded at these levels before, like up and down, it would trade here between 25 to 42. I kind of know like there's a lot of sellers at 42, a lot of buyers at 25, and price kind of ping pongs back and forth in this high volume shelf. But in this low volume shelf, there's no data. No one really knows what the stock's worth. And so like it's going to squeeze a lot faster and slide in that range once we start getting through there. And I don't think Roaring Kitty, I don't know if he's a genius or not, but at the end of the day, he has a ton of money. He might actually be retarded, and it's going to help him hold the stock a lot longer because that's what he's done with GameStop and other stocks before. He just holds and holds and holds. And then once he starts tweeting and it goes mainstream, we can see a massive squeeze. So really bullish on Unity. Obviously, I'm being very smart and very calculated and taking profit into strength and just following the flow and the levels. That's all you can really do. And then once things are squeezing, it's kind of all up in the air at that point. Price is going to be moving so quickly. Like you can either buy or sell in that, but it's all gambling. Right now, I'm just being as strategic as possible and then just trying to capture that really massive move that plays out later on. And then lastly, I think we talked about Tesla a bit, but really what I'm hoping for here is, this might pull back a little bit here, but nonetheless, I still think 360 to 365, and then we're going to be off to the races. And one more thing, just as far as like risk management goes, VIX has been kind of following a pattern. I've been just like watching a little bit, but once it does get below 13, it's probably in your best interest to buy some VIX, buy some volatility, because I do think that once we get down to that 13 area, we're probably going to bounce and there'll probably be a bit of a pullback in the market. I'm not sure what the reason is going to be, but more than not, every time we get down there, VIX bounces, and when VIX bounces, naturally the market's going to sell. So when volatility is really cheap, it's probably worth buying. Let's just check futures one last thing, and let's see what tomorrow is going to look like. Really, this is going to probably pull back. I think we'll bounce, and then on tech, really what we're just looking for, of course, is a break to the upside. You can wait and be patient and actually buy QQQ calls or just go long tech. Once we do break over this level, there might be a retest, and then I think we're going to try to push towards new all-time highs on tech as well. So really exciting times. I'm going to be covering a lot more. I know I said a lot here, and I know that I did make a bear prediction for probably late this year or sometime next year. Right now, can't stress enough how bullish I am, but I'm going to talk a bit more about what that means for later on once I think that we are going to be near a top and everyone's going to be FOMOing in and buying. Yeah, and this is starting to push over. So this is already looking pretty bullish here. But nonetheless, hope you enjoyed. A lot to cover. Join the Discord. Ask me what you want, and I'll see you in there, guys. See you in the next video.